Invest Africa, proudly brought to you by KPMG.
A new report by global law firm Baker McKenzie has rated South Africa as the most attractive merger and acquisition destination on the continent. Hello and welcome to Invest Africa. I'm Osibo. Now, as companies around the world are strategically moving into new markets, Africa, with its natural resources, growing financial markets and rapidly expanding economies, is an attractive destination for global investors and multinational firms. Joining me now are Morne van Merwe, partner at Baker McKenzie South Africa, Geel, head of deal advisory at KPMG South Africa, and via Skype joining us from London is Dr. Ponmile Osibo, research analyst at the African Private Equity and Venture Capital Association. Gentlemen, thank you for making the time to join us. Morne, let's maybe start off with that report and maybe give us a sense of what are the key highlights that have made their way onto your executive summary.
Thank you very much. Yeah, as you've stated, insofar as South Africa is concerned, surprising news that South Africa still rates as the top M&A and IPO destination on the continent. 6 key macro trends and themes featuring in this report. Maybe I should just run through them very quickly. First of all, extremely accommodated monetary policy, obviously looking at this from a global point of view. Secondly, normalizing of business conditions after a distressed position. Strong US dollar, slowdown insofar as the Chinese economy is concerned, low but rising oil prices, and structural reforms.
So a couple of issues that you're putting on the table, and no doubt that we're going to be unpacking, but the first statement you made was that it's surprising that South Africa still attracts the lion's share of merger and acquisition activity. Give us a little bit of insight as to why the surprise element.
The statement I make in light of all the negative news that is coming our way at the moment, a strong sense at the moment that there's something wrong with our economy. We hear words like the economy is ill at the moment. And I think that as a result of the slowdown or the standstill in the resource boom, it's actually exposed structural issues insofar as our economy is concerned. I think it's becoming apparent that our economy historically was just too dependent on resource. And there needs to be a shift towards industrialization, and hence also I think the government is moving towards developing industrialists to trailblaze that endeavor.
So John, Morne paints a picture for us where we're almost at a tipping point in South Africa where the economic conditions are not great, and yet we're still seeing merger and acquisition activity coming into this particular market. What's your forecast? Do you see this as a trend that's likely to continue, or is it going to be a tipping point that's going to take us in another direction?
No, I'm still quite confident. As gloomy as it may seem, and business confidence indices are down at the moment, I'm still quite positive. We are regularly contacted by international parties. I mean, as recently as this week, I've had 2 requests for information on some South African opportunities. So we continue to see a good trend going forward. We've had a very good last 6 months in terms of activity. And we think it's going to continue. So no, we're still bullish about the market going forward in terms of merger and acquisition
Where does that
activity.
bullishness come from? Why are you so confident, given the descriptive words that Morne puts on the table? Growth has been described as pedestrian. The outlook for the economy is not positive. Why the confidence?
Well, I think the confidence because this mergers and acquisitions is still a long-term game. So when you're coming in, even though there might be some short-term headwinds and some short-term difficulties, people, when they enter into transactions, take a very long-term look. And I think the African continent overall is still a very attractive destination. And Africa has 7 of the top 10 best performing countries from a growth perspective. And the growing story of Africa and its consumer is a very positive one. And South Africa is still seen as that gateway into Africa, maybe not to the same extent as it was a number of years ago, but still a very positive destination for the very reasons, as Morne has said, a very strong banking system, strong legislative system, a good economy, Yes, there are tough areas right now, but still seen long term as a very positive destination for entry into Africa.
Well, let's go to London now, and perhaps Ponmile, you can come in and give us a comparison between South Africa and the rest of the continent, and also maybe just challenge a little bit around this notion of whether South Africa still holds that position as being the gateway into Africa. What's your insights on that part?
Thank you very much. Well, John did make some very good comments. South Africa has historically been seen by many as the gateway to Africa, and it still holds that position. But what we're beginning to see, because of the slowdown in South Africa's economy, whereas it's not all bad, we're beginning to see people look further afield. So some people, especially coming out of the Middle East and India, are beginning to look at East Africa as that entry into Africa. They're also some people are looking at West Africa, particularly Nigeria, but obviously, they're still waiting to see what is going to be the political situation as that develops. But generally, South Africa, we've seen the amount of private equity investments going into South Africa decrease from 28% between 2007 and 2010 to 24% in 2011 and 2014. That is only 2% below what we've seen in the comparative landscape for West Africa, which is now the highest. So South Africa is still very strong in terms of private equity investments coming into the continent.
So South Africa is still very strong, Morne, although we are seeing other African markets picking up. Let's talk about monetary policy. It was one of the things that you picked up and highlighted in the report. We know that at a global level, the rate hike conversation has grabbed everybody's attention. What's the long-term play on merger and acquisition activity as the US begins to introduce high and high interest rates?
Yeah, the expectation is that increase in interest rate will not be a sudden surge. It will be eased into the market. That's what's important is also insofar as the Japanese monetary policy is concerned, also geared towards lower interest rates. So it would appear, and also insofar as the European zone is concerned, exactly the same story. It would appear as if there's really an effort from policymakers to assist the economic recovery that we're seeing at the moment through easing economic policy. I think another interesting part of our survey, which we should just talk about for a minute, is the whole issue pertaining to transaction attractiveness.
Right.
It's something that we looked at, and there's a rating of which countries are perceived to be countries where it's attractive to do deals. So the question is, what do you look at when you rate that? And the things that for investors coming into a market, the survey shows the issues that they were looking at is economic growth, stock market size of the economy, the legal structure, freedom to trade, business regulation, etc. And what's interesting, that the outcome of that is maybe the first three places, Hong Kong, Singapore, and Switzerland. And then so far as the African continent is concerned, number 22 in the survey, South Africa, 35 Egypt, and 36 Nigeria, which is quite, again, coming to the South African story insofar as its positioning on the continent is concerned, gives a very interesting kind of view of the world. And
it also brings us to the point of business conditions, which is what you highlighted, and this is what I'm going to throw to you, John. To what extent do you get a sense that there is a policy priority in South Africa to improve business conditions so that we're able to attract more merger and acquisition activity? Yes,
I do think so. So certainly there's been noise of late of some maybe changing regulations. It hasn't been positive for the economy. And certainly I think the count that's come back from government and the leading party is to say that they absolutely understand and hear, and they are trying to look at things to try and ease red tape in lots of areas to make investment easier and for even startup businesses. But very much in terms of takeovers, mergers, acquisitions, trying to ease the process and so to make it more clear and easier for companies to come in. So absolutely, I do think there's an understanding. There are certainly regulatory bodies that have roles to play, the Competition Commission, etc., that do take active parts, but it's very much in terms of a legal framework and an understood framework. And I think it's important to have understood, clear and that when you're entering into a territory or region, it's known and understood what's going to happen when you consider a transaction. And we're seeing that happen. I think the bodies are aware of that.
Yeah, but I could just maybe come in there. I mean, from being Baker McKenzie in South Africa, receiving a lot of interest from global investors, our experience is that the deal-making environment in South Africa is becoming increasingly complicated. There's a lot of uncertainty insofar as the regulatory environment is concerned, especially in certain sectors such as the mining sector. And the feedback that we're getting from clients, the feedback that we're getting from talking to our colleagues in other parts of the world is that, we need to be careful that we don't start finding ourselves on a slippery slope, and there needs to be, from my point of view, a serious intervention from government's point of view to do exactly what John has been talking about now, to make sure that it is easier to do business in South Africa, and that the message to the international investors is that we are open for business.
The deal-making environment and transaction attractiveness, two key issues that have been put on the table. Ponmile, let me bring you in this regard. Do you get a sense that from the rankings that Morne shared with us, where we saw South Africa coming in the early 20s and other African countries more in the mid-30s and even later, that these rankings are going to change? Do you get a sense that the deal-making environment is improving in the African context across the board?
Yes, well, from a private equity's perspective, it is definitely improving across the board. The stats that Morne discussed obviously are just one of many factors that people will take into consideration when looking to make a transaction in Africa. Just to share some statistics with you, we've seen the figures double almost year on year from 2012 in private equity capital being invested. It was about 2 billion in 2012. 4.3 billion in 2013 and 8.1 billion in 2014. So the deal-making environment is definitely more attractive. And we're seeing similar, 2015 is also going to be a strong year in terms of deal-making. Might not be as high as 2014. But it's definitely something that we see is on the rise. And the interest as well is coming from further afield than we've seen over the past 3 to 4 years.
So the deal-making environment is certainly looking increasingly attractive. We're going to be taking a short break. When we come back, we begin to dissect where is the smart money actually going and try to divulge which sectors are attracting the lion's share of merger and acquisition activity in South Africa and the continent broadly. We'll see you straight after this. Welcome back to Invest Africa. Still with me in studio, Morne van der Merwe, partner at Baker McKenzie South Africa, John Geel, head of deal advisory at KPMG South Africa, and via Skype from London is Dr. Ponmile Osibo, research analyst at the African Private Equity and Venture Capital Association. Now, before we went to break, we really just began to paint the broad landscape of merger and acquisition activity and the environment that informs us in South Africa and the continent. And now to get a more sectoral perspective, John, let me bring the question to you. We often hear of economic diversification across the continent. If you were to juxtaposition merger and acquisition activity against this, is this mirroring these diversification efforts, or is just really still in the resources space where we're seeing this activity?
No, I think it's actually, resources is a big part of Africa and will continue to be that, but we're actually seeing, I think, in going forward, great activity in other parts of the economy. So if I had to look to see some of the areas where there's been a lot of activity and will continue, areas like financial services, consumer markets. And I say consumer markets because that is one of the big attractions of Africa, is the size of the population, the growing affluence of the population, the spending power of the population. And we see a lot of consumer market products and services related to that, so like telecommunications. Those are the areas we see increased activity in the recent past, and going forward we believe that will be the continued position.
Morne, a two-pronged question to you. One, just to get your sense of whether you are also seeing this diversification. But secondly, who are the big players in M&A activity on the continent and in South Africa? Who's coming in and actually putting the money behind the deals?
Okay, interesting question. So on the first part, back to the Baker McKenzie report, if I may, the report shows that in the next 3 years, the sectors that will be receiving a lot of attention, healthcare and pharmaceutical, number one, interesting. Consumer goods, telecommunications, financial services, and then the energy sector. My own experience insofar as transactional deal-making work in South Africa is concerned, there's been a shift away from resources for obvious reasons, and a lot of attention being paid to energy as a result of the renewable project and also the baseload program that's being rolled out at the moment. So there's quite a lot of deal-making attention being paid to that sector, and I think very soon we'll see a secondary market being developed insofar as that space is concerned. And I think it will not be limited on the continent into South Africa. We can expect that to expand onto the rest of the continent. Where's the money coming from? Where's the interest coming from? So I think that obviously in the recent past, a lot of interest from China and India. That interest is still there. It's not. We certainly not seeing. Although there's a lot of talks about the Chinese economy slowing down and contracting. We still seeing a lot of Chinese interest, and I think there's a renewed interest from traditional developed markets such as the US. And Europe and also Japan. We've seen quite a lot of interest coming from that part of the world. And the reason for that being is that you're sitting with private equity funds and corporates who's been very reluctant to get involved in spending up to now as a result of market conditions. But that situation, as we said, that appears to be changing. So there's a lot of capital to be deployed. So that's where it's going to come from.
Ponmile, I think this really puts the question at your door, because there's this view that there's just too much money and too far deals, and that's sort of coming through from the analysis that I'm getting from Morne. Let me get your reaction to that. Is there too much money and far too deals to match that money to?
We actually disagree with that particular comment, because when you look at the amount of capital that's actually being raised by private equity funds as a percentage of the global, it's less than 1%. So from a private equity point of view, Africa is actually quite underpenetrated as a whole. There's still a lot of room for private equity to find these deals and actually to invest in these deals on the continent. We are seeing this year, in terms of actual funds raised, there's been about $3 billion raised for Africa, which is not even the highest in recent times. So there's still a long way to go in that perspective. In terms of diversification of sectors, we are seeing, apart from those that have been raised by John and Morne, there's also quite a lot of interest in infrastructure and real estate, which is coming through as well. On the back of Obama's Power Africa, a few funds have come out. Blackstone have raised Black Rhino, which is partnering with Dangote, that will look to do over $5 billion in infrastructure deals across Africa in the next 5 years. So there's still a lot of room for deals to happen across the continent.
Let me shift your focus for a second and just get your insights, Ponmile, around value realization and value creation in Africa. How do African markets compare? And in particular, I'm thinking of the deal in the South African context between Bain and Edcon and how that played itself out. What would your insights be when it comes to value creation and realization?
I think value creation is a core part of every private equity fund manager strategy in Africa, mainly because there is little or no leverage available. A lot of deals that happen in Africa are not to have no leverage on them. So value creation is key, and this is executed in different ways. Either managers coming on board and using their network to expand these companies from being a single country firm into a regional player, or taking them pan-African. Also diversification of products, organic growth. These are all different strategies that are key to be able to actualize returns for your investors. Now, just looking at Edcon and South Africa, obviously that is a very unique deal. It was Bain's first into the continent. It was also done just at the cusp of the financial crisis. But I think Bain itself has had to deploy a very strong value creation strategy in Edcon to be able to ensure they deliver the returns on that particular investment that they made.
John, let's flip the direction now and perhaps talk a little bit about South African companies moving out. Let's take Brait as an example.
Yes.
Is this a firm future trend that we're likely to see to begin to solidify out of South Africa?
Yes, so I think Brait, talking about Brait, they've done some fantastic transactions. So just like Edcon has drawn some attention last year, the biggest exit ever was when Brait sold off its Pepkor transaction to Steinhoff, realized a lot of cash, and then in the last 3 months has deployed that into two very big transactions in the UK, the one being New Look and the other one into Virgin. So two very big transactions outside of South Africa. And I think if we look at the private equity and the big conglomerates in South Africa, a lot of them are deploying their funds internationally. The growth opportunities for some of those funds may be a bit more constrained in South Africa, and there's big opportunity. And the big South African companies are becoming multinational companies. And for them to continue to do that, there are attractive opportunities for them outside of South Africa. And I think an increasing part we see too is the intra-Africa opportunity. So whilst you mentioned Brait going into Europe, I think I saw speculated today and another opportunity potential for them in a high street retail environment. I've seen today an announcement that in Kenya, the potential for Helios to get involved in Kenya telecoms. So we think there's still big transactions, and there may be more opportunity on the continent than outside of South Africa right now. So yes, I think this trend is likely to continue, but it's not a divestment or disinvestment.
Yeah.
It's just it's an expansion of their growth strategy, and it's international as well.
Morne, you're nodding as both gentlemen speak, so I want to get your insight in, but I also want you to deal with another issue that you listed as one of the highlights in the executive summary, currency. And we've seen a lot of currency volatility, not only here at home, but we know that this is a big sticky point for investors looking in. Your insights on that as well.
Yeah. Okay. So a big part of our mandate here in South Africa is obviously to, because we're a global firm, is to take our clients' hands and journey with them onto global platforms. Obviously, that's not a wish on the whole of corporate South Africa's menu. I think there are a few South African corporates who's got it high on their agenda, but I think it's becoming increasingly harder for South African companies to expand into other parts of the world as a result of currency volatility. And if you look at the levels with the rands at the moment, it's very difficult to go and make a hard currency play with soft currency. So I think more and more you're going to see in the thinking of corporates wanting to move offshore, how do you design a structure that will give you the opportunity to eliminate that drawback of currency fluctuations.
Ponmile, let me come to you with a question around black-owned private equity firms. We've seen a bit of a flourishing here in South Africa. Give us a sense of whether the continent is also getting onto this trend. But more importantly, what's the so what? Are black-owned private equity firms actually shifting the dial when it comes to the M&A space?
So South Africa is unique in its sense of it has a number of PE-owned black private equity firms. But across Africa, what we're seeing is the growth of indigenous private equity firms where they're looking to raise capital locally and also grow the private equity industry. So we are seeing, for example, there's a Synergy Capital recently closed in Nigeria, which is a first-time fund owned by two indigenous partners, which closed at roughly at about $100 million. And we also saw Ascent Capital in East Africa, which first closed at $50 million. And this has strong indigenous content, and we're seeing that interest and demand from some international investors to invest in indigenously owned private equity firms across the African continent. But that withstanding, there's still space for the larger indigenous private equity firms, the likes of your Helios, your African Capital Alliance, who would look to, the Abrages, who would look to invest in Africa, but also would be doing much larger ticket sizes as well.
Well, it certainly seems like there are still opportunities ripe for the picking when it comes to M&A activity, not only in South Africa, but the continent broadly. A very big thank you to my guest, Morne van der Merwe, partner at Baker McKenzie South Africa, John Geel, head of deal advisory at KPMG South Africa, and via Skype from London, Dr. Ponmile Osibo, research analyst at the African Private Equity and Venture Capital Association. And of course, that does bring us to the end of the show. And for you at home, if you would like to participate in this conversation, you can do that. That's by using the hashtag InvestAfrica. Following me at The Real Nosy. Tweet us your questions. Let us know what you'd like to see as we continue to Invest Africa. Thank you for joining us.
Invest Africa, proudly brought to you by KPMG.